This is the 6th annual Hotel Investment Conference in Africa, and it's currently underway in Durban. It is an established business-to-business networking platform for investors, developers, owners and operators within the sub-Saharan Africa's hotel and wider hospitality sector. The theme this year is Recharge and Refocus, Navigating the Changing Hospitality Landscape. Hannah Viviers caught up with Arthur de Haast, chairman of Jones Lang LaSalle, and started by asking about his view on the current status of the lending space in the global economy.
Well, I think it's a very mixed picture. In certain parts of the world, we're clearly facing some severe difficulties, in particular in Europe. The Americas, particularly North America, is staging some sort of recovery, and there's considerable interest now in some of the South American economies as well, where we're seeing good, strong economic growth and a great deal of investor interest in the sector. Asia continues to be strong, although some economies are definitely slowing, but overall the picture there is pretty positive. And here in Africa as well, we're starting to see some real opportunities emerging as the economies of some countries are particularly benefiting from recent commodity discoveries.
And yet the difficulty seems to be for hotels that they are not getting the lending that they would actually want to be able to grow their businesses.
Yes, that remains a very significant challenge. The hotel sector is still quite a specialized area for investors. They tend to be relatively cyclical in terms of their operational profile, and therefore, in difficult times and especially in uncertain times, investors will be fairly wary of that type of an investment.
So your clients come to you, Arthur, and they say to you, I would like to take a look at this hotel. What would you look at? What are the key things that you would look at to say to them, this is a good buy, or perhaps stay away from this one?
Well, it depends on the type of investor. I mean, some investors who are looking for long-term steady returns are likely to focus on markets where they feel comfortable that the demand is already in place, that and also regulation in terms of taxation and the ability to move capital in and out of a market and so on. Those are quite important factors for the very large institutional type investors, the pension companies, the insurance companies, some of the sovereign wealth funds and so on. So they will tend to still prefer, despite the relatively low growth, still prefer the more established markets where they'll be more comfortable. You then have a different type of investor, more the private equity funds, the high net worth individuals who are looking for more growth and will look out for opportunities where the income outturn looks more uncertain, but the opportunity for short-term and longer-term growth is greater, and they will focus on those markets.
Let's talk about that growth. A lot of economies in Africa are doing quite well when it comes to their projections and where they're at if you were to compare them to countries in the Eurozone, for instance, where there's a lot of trouble there. Your operation's a lot more in North Africa. What is the attraction there?
Well, I think North Africa has historically been a strong market for tourism, partly because of its proximity to a major demand generator, which is Europe, of course. So if you look at countries like Morocco and Tunisia and Egypt and so on, they have benefited from their proximity to Europe and therefore the airlift, etc. And also, they have a good tourism product, both in terms of beach product as well as in case of Egypt, of course, great history and culture, etc. Obviously, those markets have been quite badly impacted in some of those countries, not countries like Morocco, but Tunisia and Egypt, for example, have had quite a turbulent couple of years because of the political situation. So there's now definitely a much greater interest in sub-Saharan Africa from many of the global brands and indeed some investors.